All right, folks, 5 minutes. T minus 5 minutes. T minus 2 minute. T minus 2 minutes. Okay, good morning, Checkmate crew. It's the opening bell of the New York Stock Exchange at 9:30 a.m. on this beautiful Tuesday morning, October 25th, 2022. Yours truly, Mickey Blindside here with your market memo. Okay, so looks like we're continuing our rally. Remember a few days ago, around here, remember how I said, and it's just not me, but also some of the major investment banks. I think it was Goldman Sachs. They reported that that put volume by retail was at its highest ever volume, and most of that was in 0 to 2 days till expiration, and pretty much they got wiped out. So hey, I've warned you guys from before. Bear markets tend to destroy more bears just because of the bear market rallies can be very vicious and it can be very sudden. All right. So this is why, in low liquidity markets like this, I prefer to wait for higher quality zones to either short or go long. Or to place any trade. This is why I'm patient, because this can literally wipe out any put position right here. Okay, so again, retail record high put volume around here, and they just got eviscerated. All right. As far as my plan still hasn't changed, except with one caveat. I did notice something in our liquidity data, so let's start with that. One of the things that I noticed, especially in our junk bonds ADL line, is that we're seeing some divergences happening, okay? So this is our junk bonds advanced decline line. Every day I go and I record the advances versus declines in junk bond issues, and that's helped us really in looking at whether or not the rallies are sustainable. And generally, if you want the rallies to sustain for more than a couple of weeks, you really need this line to turn up, okay? And by turning up, we also look for 4 advances in a row. Okay, so there's a little bit of a divergence since about October 12th. The S&P 500 has been going up, but our junk bonds advanced decline line is still declining, all right? Now, we've had 2 advances in a row. So if we don't get 4 advances in a row and this junk bonds ADL line still keeps going down, and at the same time we hit 3,900 or so on the S&P 500, I may enter 3 to 6 month put debit spreads at 3,900. Okay, so a little bit longer dated, just in case if it does get to that 4,100 zone above our delta neutral. Delta neutral is still around 3,900 to 4,000, so it could overshoot that and go to about 4,100. So that's my original put buying zone, is that 4,100 to 4,125. That's the plan we've had for weeks now. But again, if I see that this keeps going down as the S&P 500 hits 3,900, I'll enter my puts a little bit earlier. Okay. Now, if we get 4 days in a row, so if we get 2 more positive days, 2 more days of advances over declines on our junk bonds ADL, then no, we're going back to the original plan of waiting for 4,100, 4,125. Okay. So I just wanted to add that to my plan. So it really depends on this liquidity signal right here. If this keeps going down, generally these kind of rallies are not really sustainable and they'll reverse pretty quickly. All right. And I imagine it may reverse back around the delta neutral zone once it starts getting delta neutral around 3,900. So that's where my levels come from. It's all based on options positioning, and also the trigger is based on the liquidity data. All right. So that's our junk bonds advanced decline line. I mean, since we're talking about liquidity, we might as well talk about the New York advanced decline line. This is not New York advanced decline. This is New York Stock Exchange high-low line. Okay, we'll look at the NYAD next after this. But it's still decreasing. And again, we don't really get into any type of long-term bear market, so a bear market that can, a long-term bull market, we don't see, usually we do not see a very long bull cycle. So, even in this long-term bear market, we could see a mini bull market that lasts for months, perhaps even quarters, but that is not sustainable if this does not turn up. We need to get more highs over lows. Okay, and so part of our mother of all buy the dip signal, our MOAB signal, is higher highs, higher lows on our junk bonds ADL line, but also our high-low line. We want this to curve up. Okay, we have not seen that yet. If we want to see, remember in the summer how we had that rally for a few weeks, we need the line to at least flatten out. But I'm not seeing that. Okay, so we'll see. We'll see what happens today. Now, the New York Advanced Decline line. The New York Advanced Decline line is trying to make a low and it's trying to advance. We'll see if that can continue today or not. All right. And then also, too, our equal weighted S&P 500, it's going up as well, too. And again, I think our main liquidity signals, though, is the junk bonds ADL and the high-low line. Again, really nothing has changed. It's still in a downtrend. So I'm more inclined to short the rallies than I am to buy the dip in this market, especially in the U.S. indices. Okay, until those liquidity patterns change. All right. So on Friday, I also closed my short puts, my short 366 puts for November. We got some good gains. I have about a little bit over. I made about 15 points per contract. So per contract, that's like $1,500, which is pretty good. For about 3 weeks, very minimum risk, very low management. Don't have to day trade. Don't really have to look at my screen all day. That's been very good profits. And the reason why I got out on Friday was because of our liquidity signals. And not only that, but also bond market signals. So let's go to our bond market signals as well, too. One of the things that I got worried about was this TIP TLT. It looks like it's coming back down, but this on Friday was pretty scary when I saw this. When I saw this leap up like that, pretty much right now, in order for this to not be a big inflationary signal, we really need to see this as a false breakout, which means this week, this thing has to come down quickly. All right. This really does have to come down quickly. If not, I think the markets are going to take that as inflationary times are yet still ahead. But we'll see. It's just one day. If you actually look at it on the monthly chart, all right, we still have about a week left. So if by this week it can close all the way back down here and close out the month back at around our box level right here, all right, that would signify a false breakout on the monthly chart, and that would create this huge wick on the monthly chart. And I would suspect that at that point, TNX would also fall too at that point. All right, and that might be bullish for stocks, especially the QQQ, okay, especially the NASDAQ. So we'll see. TNX is still a very important chart. I would say this is one of the most important charts that you're going to see this week. If we see a huge decline in this, and at the same time TAP TLT really breaks down, that could move markets up. And so again, this is part of our liquidity signal as well too. I'm grouping it in the same category as far as knowing when to short the S&P 500. If our liquidity data turns up, as well as TIP TLT really breaks down and TNX also comes down too, then of course I'm not going to go ahead with that put buying at 3,900. I'm going to be patient and wait for our zone at 4,100, 4,125. So the main plan is still that 4,100, 4,125 that we've had for weeks. But again, if TIP TLT keeps going up, if TNX keeps going up, if our if our liquidity data still is going down, then I might go ahead and just preempt that just a little bit at 3,900. That's all. That's the only change, okay? And it's really based on this data. And this was what got me out of the SPY short puts, the cash secured puts that I had. I can always re-enter that if the market comes down. And so I just wanted the capital available for me just in case if the market just, tanks, I don't know, after an ER or something. Speaking of which, Apple is going to have an ER this week. I think that's going to be the ER to watch is Apple. Pretty much the important thing here on Apple's earnings, Apple had all this slew of bad news. The iPhone production is going to go down. They have supply chain issues, all of these things that they came out recently. But I think what Wall Street is really looking for is share buybacks, okay? Is Apple going to do its own version of QE for the NASDAQ, pretty much, all right? And that is going to be what people are looking for. Is Apple going to buy back more of the shares? And if it does, I suspect that it rallies. Okay, it will rally and probably take QQQ with it. All right, it'll probably take QQQ with it. We may see QQQ head up to this zone right here, around 293 or so. All right, and that would definitely send the markets up to that level that we're talking about, that 41.25 zone. It will definitely take it up to that zone. All right, so we'll see. Again, that is just a very nice zone. That 4,100 to, let's say 4,100 to 4,150. Okay, but that is a very, very nice zone to short. If the market gives us that'd be such a gift. All right, that's a very good reward to risk setup. Okay, because here at this point, you're already above all those in the money puts. So if it keeps going up beyond that, then you know that new fresh money is entering into the market. So that means you're wrong. All right, and you don't have to face a huge drawdown to know that you're wrong. So that's why I love this setup right here where we're shorting and being patient. Because if we're wrong, we can just exit for a very small loss very quickly. It's really hard to do that anywhere else, right? If you short here, well, options movement could still allow us to get over that into like the 4,000s or 4,100s. So you're not sure. You'd have to face a bigger drawdown to know that you're quote unquote wrong. All right, and that's why for me that this area, this zone right here, is my preferred area to buy puts. Okay. So again, it really just depends on liquidity data. It also depends on our bond data as well too. But again, it looks like TIP TLT is coming down, and it looks like the TNX, the 10-year Treasury yield, is falling. So that is a tailwind for risk assets. Okay. So that's the S&P 500, as well as our, some of our stocks in our plan. HUT is going up today. Oh wow, look at that. HUT's going up, and again, I should have sold some covered calls here, but didn't. I'm still waiting for our higher levels to sell some covered calls. UUUU, wow, it's over our $7 mark. Right at the opening bell, I was looking at this. It was at 680s, and now it's already at 715. That's quite a move. We'll see if this is sustainable or not. I'm guessing UUUU is celebrating from Australian dollar coming up. Yeah, Australian dollar is rallying hard. So there's some news about China reopening, and that is